Good morning. How's everybody doing? I'm going to talk to you. Well, I guess I have two primary objectives today. One is I'm going to scare you to death, and two is to simultaneously convince you that it's not really that bad at the same time. So the way I normally do it is go through the good news, of which there is still plenty. I think, as we heard this morning, the economy is still doing really well, both statewide, but also right here in our own backyard. When you think about housing, home ownership is still clearly the American dream, like synonymous with what it means to achieve your goals or to be successful. I think when you take a step back and look at rates, I know everybody's kind of freaked out about rates going up and what that's going to mean, not just for housing, but for the economy as a whole. And I think the good news there is that rates are going to go up much more slowly than what folks were forecasting, even as recently as late last year. And I think, from a housing standpoint, we are seeing a lot more supply come online. And so to the extent that you've read any of those articles or come and nerd it out on my podcast with me or anything like that, then you will know that supply is the number one constraint, both in terms of new construction, but also just the turnover of the housing stock that we currently have. And so that's a much needed kind of development that's really only started to creep up in the second half of 2018. That being said, as optimistic as I am, I think I would be doing you guys all a huge disservice if I didn't keep it, really real with you guys about some of the challenges out there, namely on the affordability front. And I think that's an issue here too, in absolute terms. And so we'll kind of break that down a little bit. But it really has eroded pretty significantly because home prices have really, gone up at a pretty healthy and solid pace, and yet incomes just haven't kept pace with that. And so folks are falling farther and farther behind the curve. I do think we're kind of getting to the point in California's housing market where we've let these supply problems go on for so long that they've kind of, metastasized almost into a demand side problem. And I want to show you some of the evidence that I've been tracking over the last year that really shows me that it's not just a supply side story anymore, that there really is issues creeping up on the demand side, both in terms of affordability, but also I think there's a kind of consumer confidence element. When you look at how the market's moving, right, for anybody who wants to buy or sell a home, the market's a lot less competitive than what it was. And this is kind of the point where I tell you the bad news, but also kind of, reassure you that things aren't that bad. I did a newspaper interview just the other day, and I said, homes are taking longer to sell. And the very next day, I read in the paper, like, the tables have turned on home sellers in California's housing market. So, the one thing I, can recommend is, like, cancel your newspaper subscriptions, right? Those folks are in the business of selling newspapers. And so, when I say that it's taking longer to sell a home. I didn't say it takes a long time to sell a home. I said it's taking longer than it has over the last year or so, and those words can kind of be turned into something that's much more scary, I think, than what it actually warrants when you look at the data. The other thing I'll talk about quick is just kind of some of the economic risks. I know we had a phenomenal economics presentation this morning, so I won't beat that to death, but I'll just tell you about some of the things that I'm worried about from a recession standpoint, or things that I'm looking for on a trigger front, because I don't necessarily think that housing is going to be the thing that takes us down this time around. I think the risks are largely external at this point, and so I just want to at least underscore a couple of those for you to keep an eye on as we go. I don't want to, again, beat this to death, and I know we had a killer econ presentation, but I would just point out that from a housing standpoint, the economy is probably our number one strength right now. We're still growing at a pretty healthy clip. When you look at labor markets, they're very tight, and that's true in California as a whole, right? And in the Bay Area especially, but it's even true here, and you saw how we were up in the high double digits for unemployment. We've more than cut that in half over the course of this expansion. So the economy is probably the number one determinant of housing, right? When people are out there working, making money, getting married, having kids, all that stuff, that really is what pushes them into the housing market, and obviously into things like home ownership. So the economy is probably our number one strength. You can see how good we're doing here in California. In fact, that bar up at the top, the green one, is Kern County, and so you can see that we've actually done a really good job in recent months, even of continuing to chip away at what little unemployment there is here. We always have a historically higher level of structural unemployment here in Kern County. We have a variety of kind of informal sectors, I think more concentrated than what you see in our very most urban cores. But I think the point that I'm trying to make on the right-hand side is that yes, California's improved incredibly, and that improvement and growth, what have you, has been pretty broad-based in terms of spreading across every major market in California, including markets that used to be up at 16, 17% unemployment, which are now down below 7%, like us. This is interesting, and I don't want to belabor the econ side of it, but I think this really goes a long way towards explaining what's going on the housing front, right? So if you go back to before the recession, California had about 15.5 million jobs on its payrolls, and by 2010, we'd lost over 1.3 million of those jobs. But what's really interesting is that we'd recovered all 1.3 million jobs by May of 2014. And so for basically the last 5 years in a row, we've pretty much had new all-time high levels of employment every single solitary month, more or less, such that by the end of last year, and actually we just got the January data, I wasn't able to bake that in for this morning's talk, but the point remains that we recovered not only all the 1.3 million jobs that we lost during the recession, we have another 1.8, 1.9 million jobs on top of that previous level of all-time high numbers of jobs. Now, unfortunately, if I showed you the chart for things like building permits, we came nowhere close to kind of adding 3.1 million new homes to the state since the recession ended. And so that's why you're in this situation where lots of good jobs, lots of folks making money. We know that home ownership's the American dream. Those with the most money are going out and consuming the housing and pushing up prices faster than incomes. And so that's where the kind of affordability challenge goes. And I think this is true right here locally, where in some ways our biggest strength is our biggest weakness, right? We have this economy that's growing, and we're creating jobs really across the spectrum of wage categories and industries, and we're not accommodating that economic growth with housing, and this is where we kind of end up, right? You don't want to ever root against economic growth, but when the economy's growing, we have to kind of grease the skids for that to happen, and housing is a huge part of that. Unfortunately, when you take all this great economic data, it used to be that great economic charts look just like great housing charts, right? But if you remember the last 5 or 6 slides I've just showed you, right, the unemployment rate number has basically been coming straight down at a very sharp pace. The jobs numbers are 3.1 million above where we were at the pit of the downturn, and yet this is the story for home sales, right? You go back to 2009-10 when the recession ended, there isn't much growth to speak about from a home sales standpoint. And in fact, if you zoom in on the far right-hand side, what you can see is that home sales are actually starting to slide, right? So we basically bounced around 420,000 home sales for about 9 years in a row. And we were able to maintain that without growing it, despite the fact that the economy was growing. But really, it started to become more difficult to kind of shrug off these affordability issues that have brewed up. And in fact, we saw home sales start to slide about midway through 2018. And in fact, the last 3 months that we've been tracking into the first month of January of 2019, home sales have been down by 12%, 14%, and another 12.6% in January. And so again, we've been able to have a successful economy kind of despite the housing issues. It's not that housing issues weren't present, but they're becoming more and more acute as affordability continues to deteriorate. And when you look at this chart, this is a chart that I could have showed you this almost exact same chart 12 months ago, and it would have looked very similar, right? The decline in home sales that I was just telling you about is largely occurring at the bottom end of the price spectrum, right? And so that was true last year as well. This is January 2019. That's my economist's lack of attention to detail there. But the point being that all of the weaknesses at the bottom end of the price spectrum, that was true last year too, but again, I think this year it's like that for different reasons because there's a demand side component to this thing. And so I want to talk a little bit about that, but it's becoming more and more clear that the the weakness that we're seeing in terms of closed sales is becoming a trend, right? You go back a couple of years, you can see we had some red bars here and there in a month that was bad for home sales, where home sales went down here and there. But it's been really consistent over the course of the last kind of 9-10 months. And in fact, those declines are actually accelerating, right? So we started declining by just mid-single digits. And again, started to go up to 8, 9, 10, 12, 15%. So home sales are really slowing down. We're holding up a little bit better here in Bakersfield. So these are all the home sales done by our wonderful, Bakersfield Association of Realtors. And you can see that we don't have that same kind of consistent, uninterrupted declines that are accelerating on the far right-hand side of this chart, right? You see that we've had a couple of weak months, but nothing like the, month after month after month of 12 to 15% declines. And I think that that is a kind of testament to the underlying strengths that we have in our economy. We were a little bit later out of the gate in terms of the recovery, but we've really started to get our legs under us, and unemployment's coming down much more quickly. We're growing the labor market faster now at this point than most of our urban cores, which are really much more unaffordable than we are here locally. But you are seeing some kind of initial pangs, right? You're seeing a lot of folks who are being priced out of places like LA, even the Inland Empire, and coming out here for affordability. But that can only go on for so long. To the extent that there's broader economic issues, we're not going to be immune to that. And even though we're holding up much better than what you see in the rest of California at this point on the housing front, we can't expect to remain immune to that forever, right? Eventually, these things are going to come home to roost here, and we're seeing some very early signs that we might be affected by these kind of trends here locally. And again, you're seeing kind of that same thing where the weakness is mostly at the bottom end of the market from a price point standpoint. It's actually a great time to, folks are out there buying more expensive properties still at a fairly rapid pace, but overall, the home sales number's still down. It's just not down by 13%, right? So I think that our relative affordability is, a huge feather in the cap, where, again, home ownership is still the American dream. In most cases, most parts of coastal California, that dream is more like a fantasy, right? But here it's in a market where folks can actually go out there and achieve that American dream, and that brings kind of all kinds of challenges for us locally. Again, you don't want to root for economic growth, but in some ways our economic development successes are kind of compounding issues where we don't have a huge affordability crunch like you see in LA, but we're bringing in folks from all other parts of the state that are less affordable. And so we have not only our own kind of domestic, local, homegrown economic growth that we need to accommodate with housing and things like that and amenities, but also to account for these folks who are coming in from other areas, oftentimes having even higher incomes than the kind of local population base, and that pushes prices up and kind of starts to create these affordability challenges that have been plaguing coastal areas for several years. This is where most of the home sales happen, and you can see that there's still several markets in Bakersfield that continue to grow sales, but again, you're seeing enough weakness in certain parts of the region that it's kind of pulling down the overall number. This is different than a lot of charts that I've been showing in most other parts of the state, where it's pretty much down across the board, whether it's by price point or geography. And so again, we have a lot of local strength that we're able to leverage, namely that relative affordability. But again, you're still seeing some initial signs that the housing market's slowing, even in a more affordable market like this one. What else? Again, I always use that cancer metaphor, right? The supply issues have kind of metastasized out, but we've been doing just very basic consumer research over the course of the last 9 months, trying to really get a better sense of what's happening out there. And we've been asking folks just a very simple question. Not whether you think home ownership's a good idea. There, over 70% are saying yes. But do you think it's a good time to buy a house right now? And what you see is that about 3 out of 4 California consumers that we're talking to every month pretty consistently are saying, no, we think it's a better time to wait and see. And you're seeing more and more sellers, over half now, who think it's a good time to make their move out of the market. I always joke that this is kind of the brother-in-law effect, or like the Kool-Aid effect that you're seeing in the housing market in some ways, right? Because if you remember back to the economic data that I showed you, that stuff's pretty solid, right? GDP is growing, unemployment's at a 40 or 50-year low, depending on what market you're looking at. 3.1 million more jobs than we had at the pit of the recession, and yet, people don't think it's a good time to buy homes. And invariably when I do these talks all over the state, you're like, look, the economy's good, home prices are growing, and you always get that comment like, yeah, but my brother told me that everything's gonna come crashing down. And so, unfortunately, when it comes to housing, I think there is a huge consumer confidence component to it. It's a huge expenditure, and in many cases, people are taking on significant amounts of debt to make that stuff happen. And so to the extent that even though you have a job and you're making more money, if you kind of drink the Kool-Aid, right, or believe what your brother-in-law told you, then you're not going to be out there bidding on homes. And that's kind of part of the reason why we're seeing this downshifting in price growth, is just there isn't as many buyers out there. It's also just for straight up economic reasons, right? So this is our housing affordability index. We go through and calculate on a county by county basis what percentage of households in this market can actually afford the median priced home in that market after taking into account things like mortgage rates, property taxes, and all that stuff. And what you can see is that, at the pit of the recession in 2012, it was almost like a once in a lifetime opportunity. If you look at the annual data that I'm showing you on the left half, it was over half of Californians could actually afford the median priced home at that point, because prices had fallen so far that home ownership was actually within striking distance again for more than half the state. But look at what's happened on a quarterly basis since then. We're basically down to the point where 3 out of 4 Californians can't afford the median priced home, right? And so, again, we care about this as a real estate industry because this is kind of hitting us directly in our pocketbooks, but it's also hitting our economy right in its pocketbook as well. And so we've been talking about this for a long time, but you're starting to see just, broader industries and businesses and talking about the recruitment challenges and things like that, right? How do we get people here and offer them enough money to where they can afford that same quality of life that they might get in some of these other states where folks are going without kind of driving my own business into bankruptcy? And it's a huge tightrope to try and walk, right? And that's true even here in Kern County. In fact, if you look, Lassen County is actually, this is on a county by county basis on that housing affordability index. Lassen County is the only county in California now that has better housing affordability than what you get in the rest of the United States, right? And so used to have a lot more markets up above that US affordability number. And that's kind of, I think, what's responsible for this kind of giant sucking sound, right? The Ross Perot analogy, but it's not sucking down into Mexico. We're sucking out people, our middle class, largely into places like Texas, Nevada, Arizona, Washington, Oregon. And unfortunately, it's not that they're going to these places because the economy is on fire in Nevada or something like that. The economy is doing better here than it's doing in most other parts of the state. They're going out there to achieve that dream of home ownership, which is still very important to a lot of folks. We are more, affordable. We'd rather be where we are here at, 53-ish percent housing affordability than down where, San Francisco is, where like 90% of folks can't afford the median priced home. But if we can, as a state, get our act together and offer the ability for folks to make that jump into home ownership, then obviously the real estate industry is going to feel that, but our entire economy is going to feel that, and I could talk to you maybe afterwards about all these killer anecdotes I have that really scare you about all the out-migration, and that's without taking into account higher rates, right? So this is a very simple thought experiment that asks what's going to happen to affordability when interest rates go up, right? And so if you go back to before the presidential election, rates were about 3.5%, right? The median priced home costs you about $2,000 a month once you bake in all those costs of property taxes and all that good stuff. If it goes up to 5.5%, if we just realize the kind of 200 basis point increase that the feds have done on short-term rates eventually, and those materialize into long-term mortgage rates, you can see that at 5.5%, that same exact house now costs you almost $2,700 a month or $2,600 a month. So that's about $7,200 a year more in payments for the exact same home, right? And so it's, I think, unfortunately, the days of 3.5% rates are probably behind us, but it's still a good time to get ahead of the curve because, again, back in the 80s, I always joked that my dad would drag me around at his dinner parties bragging about his 12% mortgage rate, right? I don't think we're ever going back there anytime soon, but I do think that the days of 3.5% rate. So this can be a great motivator for folks to save themselves a boatload of money over the next 30 years just by avoiding the kind of 50 or 100 basis point increase that may come down the pike in terms of long-term rates. Showing you the same thing on the right, just expressed in terms of how much money do I need to make to get that median priced home. And again, it goes from about $107,000 at 3.5% to about 120-ish thousand at 5.5%, right, or 128,000 actually. And so usually when I'm talking to realtors, they're not working on wage and salary type commission structures, but I think for the wage earners in here, we can attest to the fact that like when you go into your boss's office and say, hey, rates just went up, I need like a $23,000 a year pay increase, that the conversations don't tend to last too long. And that's assuming that prices don't move anymore, right? And so we're already up against it from an affordability standpoint, and when rates go up, it's gonna be that much harder, I think, for many Californians to make those payments. And we're also seeing kind of the demand side of this equation, right? So again, I mentioned and alluded to the fact that I think there's a buy side issue where homeowners or potential homeowners are either unable to because of the affordability challenges that I mentioned, or kind of unwilling to because of that kind of brother-in-law effect, right? Where they're worried that prices are gonna tank even though they've got a good job. And that's borne out by the market competitiveness that you see, right? Where it's gone from taking 14 days to sell a home last year up to 37-ish days, right? Basically a month or so. And same thing on the right-hand side, that's the sales to list price ratio. So that's showing you the typical discount of a home sold in California. And what you can see is that homes are taking longer to sell and sellers are having to cut prices a bit, and we haven't seen that in a while, to get those homes moved. Now, if it was purely a supply side issue like it was last year, then we would see these listings coming online. There would be plenty of buyers lined up to buy them, and they wouldn't be taking 2 or 3 times as long to sell, and sellers wouldn't be reducing their prices, right? So this tells me that there is a demand side component to this where buyers are struggling either psychologically, right, or just purely economically to realize that dream of home ownership. And you're seeing the same kind of stuff here locally as well, right? We're not up 3 times as much, so again, we're holding up much better than what you see in the rest of the state. It's still, and my dad would have killed back in the 80s for a 29-day median time on market. So it's nothing to panic about, right? Don't read too much into those newspaper headlines, but also be cognizant of the fact that the market is starting to shift, and it's even happening here, albeit at a much more muted amount. The other thing is you're seeing more and more actives that haven't sold coming down, right? Now we're at the point where 4 out of 10 homes that are out there active, available for sale, have sellers who are realizing that they need to start backing down on price. And so I think that, again, this kind of is indicative of the fact that there is this demand side component to the market. We're doing better, again, here locally, similar to the fact that our sales are holding up better. We're not discounting as much locally. It's not taking as long to sell here locally, but you are seeing still over a third of active listings having to reduce those prices. So again, we're not going to be totally immune to this stuff either. And you're seeing it finally showing up in prices, right? We had, even through the beginning, first half of last year, prices were growing by 8, 9, 10% annually. And you really saw the pace of that growth start to slow as the market competitiveness died because of affordability and the brother-in-law effect, right? And so as of January, we were growing only by 2%. That's actually a rebound from where we were in November and December when prices were only growing by about 1.5%, right? So we've come a long way just over the last 12 months from growing by 10% a year in annual terms to just barely 1%. And you see the same thing starting to slow here, but again, holding up better. But you can see those growth numbers on the right-hand side chart are tapering down towards the end, tapering down to 6.4%. So, nothing to, again, panic or freak out about. And boy, I hope we're all kicking ourselves, because even just going back to 2009, right, we could have scooped up tons of $114,000 single-family homes, and we'd be sitting at about $240 as of January in the dead of winter. We probably wouldn't even be here attending this conference right now, right? We'd just be like out in Hawaii counting our stacks or something. But prices have gone up a lot, but you are seeing them start to slow down. And so again, it's becoming more and more challenging, even in California's most affordable markets that we can offer like this one, right? And again, you see that the price growth is much more broad-based, right? So if you remember the sales chart, if you look out across the region, there are several markets that were having a pretty tough time this year. Not quite the case on the price front, but you are seeing on the left-hand side there that we are seeing a pretty decent chunk of the area with those lower increases in home prices, right? So, and we are seeing signs of Californians kind of cashing in. I don't have time for all my funny anecdotes, but you are seeing more and more people jump ship to other states, right? And that's responsible for the increase in unsold inventory, the increase in listings. We're growing by 35-ish% on a year-over-year basis. And so again, with all these new listings, the market should stay competitive if it was just purely a supply side issue, right? And that's not the case. And they're all up at the bottom end of the market. So why aren't people buying, right? That's, again, the demand side equation. And so that's kind of, we haven't actually seen that same uptick in active listings here. So they're up by 35%. You don't see as many people jumping ship from our market because, again, I think that there's still a lot of attractive options from a renter standpoint, right? We've got lots of demand, great economic growth, and not enough housing. And we're more affordable, so we're kind of, again, sucking all those folks in here. It's still a great time to be an investor. But eventually, these are going to start to look more like what you're seeing in the rest of the state. And you can see that kind of happening all across the region. So that's the wet blanket piece. I'm just super quick going to tell you why I'm optimistic is because, again, my dad would kill for these rates, right? It's not the level of rates that's going to tank the economy. We also know how to fix this. It means building more housing. So if you want to nerd out with me on that for an hour, I'll stand out there and talk to you about that all day long. That's my pet subject. And, yes, the Bay Area and Southern California are super egregious, but even places like the Central Valley aren't building enough housing. And so, again, I'll get down off the soapbox on that one. But this is why it matters, right? Because over 100,000 people have left the state every year for the last 6 years in a row, and that's a housing story, right? So to the extent that we want to have a robust economy, we need to sort out this housing issue because we're hemorrhaging middle-class workers out to other states. So with that, I won't beat up the forecast. I'm pretty much in line, honestly, with most of the other forecasts out there. Here's our housing market forecast. Sales down 7%, prices pretty flat because of this trepidation on the buy side. I will not reiterate all these same points. You can download these off my website if you want these slides. I will very quick, shamelessly self-promote my podcast and tell you to come listen to me over there and say thank you so much.